Hey, what's going on, guys? This is Jaguar, and this is my playbook trade for February 27th of 2020. And today I traded a opening swing breakout trade, and it was actually the opening swing high that I traded up here. So I wanted to draw attention to my journal first before we get into everything here because I want you guys to see what my assessment of the market was today going into this and why I got into this trade. So I wrote down that I was expecting a reversal, a possible reversal. I should have said possible there, but between the levels of 51 to 48, there's massive buy side liquidity there. And so even though we traded lower, I noticed in the pre-market there was tons of liquidity here at that level. And so, I went on to write my explanation of this is, I'm not exactly sure how I'm going to enter, so I'm trying to wait for the right situation and wait for clarity. However, I think that we're going to reverse from the 30-50 level, between 30-52 and 30-48. And alternatively, if we trade all through all that liquidity and continue lower, I'm going to start to expect a very bearish market. And we actually did both of those things today. So that's an example of how I use Bookmap during my pre-market just to know the levels of liquidity. You could also look at your DOM just to find that out. But I like to know where the high liquidity is at so I can see those inflection points in the market. So that was how I was viewing the market today. You can see this was the open, and I'm looking at this in 25,000 volume bars because I think it's a little bit easier to decipher what's going on when I'm looking at a standardized set of volume, and I only do this at the open. I don't look at these beyond the first 15 minutes of the day. But when you're looking at 5-minute bars and they're the entire length of your screen, it just becomes pretty difficult to see those. So I prefer the 25,000 volume bars so I can kind of see where I'm at and I can stay updated on how much volume is going in based on how many bars are forming and the speed at which they're forming. So if you're not used to looking at that, it might be a little bit difficult. But for me, I look at those all the time. So it's natural for me to see the market in that way as opposed to 5-minute bars. So we were just looking at these 4 bars. I was showing you guys my journal here on the side, and these 4 bars were in place. You can see we tested down lower. We actually made it down to 46, but we put in a ton of volume here around the 30-50 level. So really 30-49 was the VPOC of the day, or the VPOC of the day thus far. And we traded a little bit lower than I expected. However, we held that level and then we moved away from it with initiative. So here's the first thing that I needed to see in this setup. And I'm actually going to show you guys a detailed breakdown of my trading plan. I'm going to make a little bit longer of a video and go in depth about that, maybe a 30-minute long video, and discuss exactly what the nuances of my breakout trades are. I think that would be helpful to me and also helpful to some of you guys who are watching these playbook trades. So you could see that this bar actually has a decent amount of delta to the positive side, about 8%. I'm really looking for, anywhere around 10% would be ideal, but this is enough to get me interested in this trade. However, you might wonder why, we put in 1 tick above, the high here, and I'm not already in. So why did I, not engage at that point? What I'm looking for here is to see absorption. So sellers sold from here actually pretty hard. So I want to know if sellers are going to sell again. In fact, I'm pretty confident that sellers are going to come in and try to defend that level. And so when they come in and they start selling, I want to see buyers absorb all of that selling. I want sellers to just basically look like they gave up. So, I want to see some negative delta here on this bar, and then I want to see it get bought back up. You can see here at the bottom, we had negative 471, we're at negative 173, and basically when this bar gets the bullish delta, as long as I'm convicted in the idea that this is absorption going on, and I'm watching Bookmap on another screen, watching actually like the DOM being refreshed, it's a little bit more difficult in the market right now because it's not as liquid. But as long as I'm confident that absorption is going on, then I want to engage in this trade. So you see there's still selling going on, so I'm not really aiming to get in this trade yet. But basically the seller's going to become overwhelmed here soon. Okay, now we're trading at those highs. I can see how fast Delta was, well, actually increasing, but the red number is getting lower. But how fast I saw it was increasing was making me confident in the buy side. Now let's go back here. You can see I got in with one lot, and that's because we weren't all the way broken through this level yet, and also I was looking on Bookmap to look, where we're going to break the liquidity level, but I wanted to be in a little bit earlier than that because of how volatile the markets have been. I want to be able to be in the trade on time, and so I'm trading this one lot, and I'm just keyboard managing it right here, but essentially my stop is below these imbalance points. So like we discussed in a lot of the playbook trades that I've made, typically I use an 8-tick stop loss. In the markets that we have right now, I've been getting in with smaller size initially so I can actually afford that larger stop that I might need to wait for this trade to get on my side. So even if we trade all the way down here to this 207 by 278, that's the last place that I'd stay in the trade. Here at the 93 124, hopefully I'd be able to exit out of the market there if necessary. So that is quite a bit of risk here in comparison to what I normally take. And you can see as we approach this level, we had a little bit of a pullback back here to the high volume area, and then we really started to get active with the buying. And now at this point, now I want to add in the rest of my position, and really I'm just fumbling over the keyboard to make that happen. And so I'm in here. Oh, I almost tried to move the screen myself. So I'm in here, and actually as we start to put in this volume right here, I'm looking at each level on Bookmap, and I'm trying to exit at the highest levels of liquidity. I put in these, this automated trade strategy as far as getting some orders in here, but I will exit kind of fluidly. So this was actually a poor initial scale out exit because we didn't see anything that made me feel like the trade wasn't working. But it's just been so volatile. It's actually, difficult psychologically to manage these trades in the best way properly. So I got out. I was a little bit antsy in getting out of that position there. I actually, when I pressed the button, we were trading about here, and I just lost 2 ticks on the timing. But got the scale out, and then I got another target here. Another thing about this, guys, is that I actually don't really calculate my ticks, at least in my best trades. When I find myself calculating how many ticks I'm up, or the money in the trade or whatever, or when I'm looking to take profits based on a certain amount of ticks, that's when I tend to make mistakes. So in this trade, I really have no idea how much money I'm up or not, because obviously, I see on Bookmap, I could see my scratch point, which is just way down here. But, on this primary screen that I'm looking at, I really don't know how much I'm up, on this trade. So all I'm looking at in the management is, are we still putting in delta and we still putting in volume? And you can see I drug my order up here because, like I just said, we're still putting in delta and still putting in volume. And I saw that a lot of the liquidity was at 68. So I figured I could probably get filled at 67 prior to 68. And, I was thinking we might get one more splash into that liquidity, which we did. And this actually ended up being an interim top for a while. We actually rotated back down to make lows after getting up to about 30.70 or so. So this is actually an excellent exit for me. Again, I'm not looking to take out the highs or whatever. I'm sure everybody understands that, but this was actually a pretty excellent trade for me. The only place I could have cleaned it up was that initial scale out. I didn't have to be as aggressive in getting out of the market there. But like I said, markets are a little bit crazy right now. But I'm actually enjoying it. This month has been my best month thus far trading futures, And I found for the most part that I am I typically trade the best in high volatility times. Um, that I'm also typically good in news, so I really enjoy the volatility. I find it easier for me to make money because there's more of these one-sided moves where you just get in and then it just keeps on going. So if you could get in the right spot, you could really get a trade working in your favor. So this will be all for today, and I'll look forward to talking to you guys again soon. Bye.